Enron Scandal. It was a story of ambition, greed, and deception that ultimately led to the downfall of the company and left thousands of employees, investors, and stakeholders in ruin. This documentary will take a detailed look at the rise and fall of Enron, examining the corrupt practices and deceit that led to the company's downfall, and uncovering the full extent of the financial fraud that occurred. Kenneth founded Enron in 1985 and quickly built it into one of the world's largest energy companies. Lay's aggressive business practices, along with the leadership of Jeffrey Skilling and Andrew Fastow, made Enron a darling of Wall Street. Enron was founded in 1985 as a natural gas pipeline company, but it quickly grew to become one of the biggest energy companies in the world, trading energy commodities and providing energy services to customers in over 40 countries. Its CEO, Kenneth, was a well-connected political donor and was known for his close ties to the Bush family. Enron's success was built on its reputation for innovation and aggressive expansion, and it soon became one of the most highly valued companies on the stock market. Enron's success was not without its darker side. During the 1980s and 1990s, Enron created a complex web of companies, subsidiaries, and partnerships, which allowed it to manipulate its financial statements and misrepresent its earnings. This deception helped Enron become one of the most valuable companies in America, with a market capitalization of more than $60 billion. The company engaged in unethical practices, including manipulating energy markets and hiding its debt in off-balance sheet entities. The company's executives, including Lay and CEO Jeffrey Skilling, were motivated by greed and a desire for personal gain, leading them to push the boundaries of the law and ethical conduct. Enron's auditors, Arthur Anderson, were also complicit in the fraud, signing off on Enron's financial statements despite knowing the true nature of the company's financial condition. In 1999, Enron's fraudulent practices began to come to light. The company's accounting methods came under scrutiny, and Enron was forced to restate its earnings. Despite these revelations, Enron continued to deceive its investors and the public. The Enron scandal began to unravel in 2001, when a series of events exposed the company's fraudulent practices. Enron's CFO, Andrew Fastow, was exposed for creating off-balance sheet entities that were used to hide the company's debts and inflate its earnings. The Securities and Exchange Commission launched an investigation, and the media began to scrutinize Enron's accounting practices. The company's stock price collapsed, and its credit rating was downgraded to junk status. There were a series of events which unleashed step by step. It was on August 14, 2001, when Enron CEO Jeffrey Skilling resigned, citing personal reasons. This move was seen as a red flag, and investors became increasingly skeptical of Enron's financial statements. On October 16, 2001, Enron announced a loss of $618 million in the third quarter of that year. This loss was a clear sign that something was seriously wrong with the company. On November 8, 2001, Enron revealed that it had overstated its earnings by $586 million over the past 4 years. This was a major blow to the company's credibility and caused its stock price to plummet. On November 28, 2001, Enron filed for bankruptcy, the largest corporate bankruptcy in history at that time. The company's stock was now virtually worthless, and thousands of employees lost their jobs and life savings. In December 2001, Enron's top executives, including Ken Lay and Jeffrey Skilling, were called to testify before Congress. The executives denied any wrongdoing, but evidence later showed that they had been involved in a massive fraud that had brought down the company. In January 2002, Enron's auditor, Arthur Anderson, was indicted for obstruction of justice for shredding documents related to the Enron case. Anderson was eventually convicted of the charges, which effectively put an end to the company. The fallout from the Enron scandal was widespread and far-reaching. The scandal led to a loss of thousands of jobs, billions of dollars in investor losses, and the eventual bankruptcy of Enron. The scandal also led to the downfall of Arthur Anderson, one of the biggest accounting firms in the world. The legal fallout from the scandal was extensive, with Enron executives facing criminal charges and a wave of shareholder lawsuits. The scandal also had political consequences, with the Bush administration coming under fire for its close ties to Enron and for its role in deregulating the energy markets. In May 2006, Ken Lay and Jeffrey Skilling were both found guilty of conspiracy and securities fraud. Lay died of a heart attack before he could be sentenced, but Skilling was sentenced to 24 years in prison. The Enron scandal had far-reaching consequences, both for the business world and for society at large. It exposed the weaknesses of the financial and regulatory systems in the United States, and led to increased scrutiny of corporate practices. It also led to the passage of the Sarbanes-Oxley Act, which introduced new requirements for corporate financial reporting and created a new regulatory body, the Public Company Accounting Oversight Board. The legacy of Enron is a cautionary tale of the dangers of unchecked corporate power and the importance of transparency and accountability in business. It serves as a reminder of the importance of integrity and ethical behavior in the corporate world. The Enron scandal has led to increased awareness of the need for corporate social responsibility and has helped to shape the regulatory landscape for businesses today. The scandal also had a lasting impact on the accounting industry, with new regulations and standards being introduced to prevent similar scandals from occurring in the future.